Competitive landscape, global EV market dynamics, Tesla's position against rivals in 2023 and 2025. Introduction. The global electric vehicle EV market is experiencing rapid evolution characterized by fierce competition and significant technological advancements. As of 2023, Tesla remains a dominant player but faces increasing competition from rivals, particularly from China. This report explores Tesla's position against its competitors, particularly BYD and NIO, and analyzes market dynamics leading into 2025. Current market overview 2023. By the end of 2023, Tesla and BYD collectively captured about 35% of the global electric car market, significantly outpacing other major manufacturers. Tesla's market capitalization reached a peak of over $1 trillion, primarily fueled by its innovations in autonomous driving and battery technology. However, the company's stock performance was volatile, reflecting broader market trends and ongoing supply chain challenges. Key market trends. 1. Market growth. The EV market has seen exponential growth from 2020 to 2023. With the market capitalization of dedicated EV manufacturers soaring from $100 billion to over $1 trillion. Despite this growth, Tesla's stock was down approximately 15% in 2023 compared to the previous years, influenced by competitive pressure from brands like BYD, which surpassed Tesla in plug-in hybrid sales. 2. Price wars. The intensifying competition led to widespread price reductions in 2023, with both Tesla and BYD cutting prices by up to 20%. This aggressive pricing strategy has pressured profit margins across the industry, particularly for emerging players struggling to meet sales targets. 3. Technological innovation. Tesla's commitment to technological advancements, especially in full self-driving FSD capabilities, is critical for its future trajectory. Projections indicate that Tesla's revenues could reach $127.61 billion by 2025, driven by increased vehicle deliveries and enhanced energy solutions. For market expansion, Tesla is actively pursuing market expansion, particularly in emerging regions like India and Southeast Asia. To counter the competition posed by lower-cost, high-quality Chinese EVs. Competitive landscape. Tesla versus BYD and NIO. BYD's rise. BYD has positioned itself as a formidable competitor, leading in the sales of battery electric vehicles (BEVs) and plug-in hybrid vehicles (PHEVs). In 2023, BYD accounted for over 20% of the global electric car market, becoming the best-selling EV company in both categories. Moreover, BYD's strategy focuses on affordable models and in-house battery supply chains, which have proven effective in capturing market share. NIO and other Chinese rivals. NIO and other Chinese manufacturers continue to challenge Tesla's dominance. These companies are increasingly exporting their vehicles and innovating rapidly to meet global demand. The competitive pricing and technological advancements from these manufacturers are significant threats to Tesla's market share. Global competition outside of China. Tesla faces mounting pressure from traditional automakers transitioning to electric vehicles. Notably, companies like Hyundai, Kia, and European manufacturers have gained ground in the U.S. market. Tesla's share of new U.S. electric car sales decreased from over 60% in 2020 to 45% in 2023, highlighting increasing competition. Financial performance and projections. Revenue and stock outlook. Tesla's revenue forecasts are bullish, with projections indicating a rise to approximately $127.61 billion by 2025. This growth is expected to be supported by increased vehicle deliveries and the adoption of FSD technology, which could open additional revenue streams. Earnings per share (EPS). Analysts predict that Tesla's EPS could rise to $3.87 in 2025, reflecting operational efficiencies and strategic initiatives aimed at enhancing profitability. Stock performance volatility. Tesla's stock has shown significant volatility in recent years, with a notable decline following robust delivery numbers in 2022. Various external factors, including macroeconomic conditions and competition, have influenced market sentiment towards Tesla's stock. Analyst predictions for 2025. Analysts remain divided on Tesla's stock trajectory, with predictions for mid-2025 ranging from a low of $216.27 to a high of $555.41. By the end of 2025, projections suggest a potential range between $218.90 and $786.21, underscoring the uncertainty surrounding Tesla's future stock performance. Strategic initiatives for 2025. As Tesla navigates a highly competitive landscape, its strategies will be crucial for maintaining market leadership. Key initiatives include: 1. Production ramp-up. Tesla plans to increase production capacity at its gigafactories worldwide to meet rising demand. The introduction of new, more affordable models is expected to broaden Tesla's customer base and enhance sales figures. 2. Technological advancements. Continued investment in AI and battery technology will be pivotal for Tesla's competitive edge. The company aims to refine its FSD capabilities and explore new battery chemistries and recycling technologies to reduce costs and improve sustainability. 3. Market expansion. Tesla is looking beyond traditional markets to expand its presence in emerging economies like India and Southeast Asia. This strategic move is essential for capturing new customer segments and countering competition from local manufacturers. 4. Sustainability practices. Tesla is committed to enhancing its sustainability initiatives, focusing on reducing emissions across its manufacturing processes and product offerings. This commitment resonates with environmentally conscious consumers and investors alike. Conclusion. As Tesla approaches 2025, it remains a key player in the global EV market. However, the landscape is increasingly competitive, with formidable challenges from Chinese manufacturers like BYD and NIO, as well as traditional automotive giants pivoting to electric vehicles. Tesla's success will depend on its ability to innovate, adapt to market dynamics, and execute strategic initiatives effectively. Investors and stakeholders must remain vigilant as the market evolves, considering both the opportunities and challenges that lie ahead. The future of Tesla will be shaped by its response to competition, advancements in technology, and its ability to maintain profitability amidst changing market conditions. The competitive landscape of the global electric vehicle EV market is complex and rapidly changing, characterized by intense rivalry between established players like Tesla and emerging challengers, particularly from China. As we analyze Tesla's position against its rivals for the years 2023 and 2025, several counterintuitive insights emerge. 1. Market capitalization versus sales performance. Despite Tesla's market capitalization soaring to over $1 trillion, its stock performance has been volatile, with a significant decline of approximately 15% in 2023 compared to its peak in 2021 to 2022. This counterintuitive trend suggests that while investors hold high expectations of Tesla's future growth, the company's actual performance in terms of sales and deliveries has faced challenges. In contrast, BYD has overtaken Tesla in the sales of plug-in hybrid vehicles and is gaining ground in battery electric vehicle (BEV) sales, raising questions about Tesla's ability to maintain its lead despite its formidable market cap. 2. Price cuts and profit margins. The competitive landscape has led to aggressive price cuts from both Tesla and BYD, reaching as much as 20% in 2023. This strategy, while potentially increasing sales volume, also leads to squeezed profit margins across the industry. It's counterintuitive that established brands like Tesla, known for premium pricing, would engage in such a price war, which traditionally signals weakness rather than strength. This dynamic illustrates how fierce competition can force even market leaders to compromise on profitability to defend market share. 3. Technology leadership amidst competition. While Tesla is recognized for its advancements in full self-driving FSD technology, the rapid rise of Chinese manufacturers like NIO and BYD presents a challenge to this narrative. Despite Tesla's significant investments in innovation, its market share in the US has been declining from over 60% in 2020 to 45% in 2023, while competitors are quickly catching up with similar or even superior technologies at lower price points. The notion that Tesla's technological edge alone could safeguard its market dominance is becoming increasingly questionable. 4. Expansion into emerging markets. Tesla's strategy to expand into emerging markets such as India and Southeast Asia is seen as a key growth avenue. However, the counterintuitive element here is the potential for these markets to be more receptive to local manufacturers that offer comparable technology at more attractive price points. The challenge for Tesla will be to adapt its premium brand perception in regions where affordability is a critical factor for consumers. 5. Investor sentiment versus operational reality. Despite the optimistic projections for Tesla's revenue to reach $127.61 billion by 2025, the reality of operational challenges, like supply chain issues and regulatory hurdles, casts a shadow on these forecasts. The counterintuitive aspect lies in the disparity between investor sentiment, which often remains buoyant due to Tesla's innovative reputation, and the practical difficulties faced by the company in scaling production and meeting delivery targets. This gap can result in significant stock price volatility, reflecting the unpredictability of market dynamics. 6. The role of regulatory changes. Tesla's dependence on favorable regulatory environments, particularly in the US and China, presents a counterintuitive challenge. While many investors view regulatory support as a boon for EV sales, sudden shifts in policy could negatively impact Tesla's sales strategies and market share. The increasing scrutiny over EV imports into the EU and the potential for new tariffs could complicate Tesla's expansion plans in foreign markets, undermining its competitive advantages. 7. The impact of emerging EV startups. The decline in venture capital funding for EV startups in 2023, despite previous booms, presents a counterintuitive scenario. With the market becoming saturated and competition intensifying, many investors are reassessing the risk associated with new entrants. This could paradoxically benefit established players like Tesla, as fewer startups might lead to less disruptive competition in the near term. Yet it also means that innovation could stagnate, ultimately affecting the market's growth potential. 8. Sustainability versus profitability. Tesla's commitment to sustainability and environmentally friendly practices is a cornerstone of its brand identity. However, the counterintuitive aspect of this commitment is that in a fiercely competitive market where profit margins are under pressure, investing in sustainable practices can lead to higher operational costs. As Tesla doubles down on its green initiatives, it risks compromising profitability, especially if competitors do not face the same pressures or choose to prioritize cost over sustainability in the short term. 9. The dichotomy of stock performance predictions. Analysts present a wide range of predictions for Tesla's stock in 2025, with estimates varying from as low as $218 to as high as $786. This stark contrast illustrates the unpredictable nature of the market and the differing opinions on Tesla's ability to navigate the competitive landscape. It is counterintuitive to see such polarizing forecasts for a company that is otherwise seen as a leader in its sector, indicating significant uncertainty regarding its future trajectory. Conclusion. The competitive dynamics of the global EV market reveal several counterintuitive insights regarding Tesla's position against its rivals. While Tesla remains a dominant force, its ability to adapt to market pressures, maintain profitability amid price wars, and navigate regulatory challenges will be crucial for sustaining its leadership in the evolving landscape. Investors and market observers must remain vigilant to these complexities as they assess Tesla's future in the face of increasing competition from both established and emerging players. Important content in the report on global EV market dynamics. Tesla's position against rivals in 2023 and 2025. 1. Market share shift and competitive landscape. The report highlights a significant shift in the global EV market landscape, particularly the emerging dominance of Chinese manufacturers like BYD and NIO. By the end of 2023, Tesla and BYD accounted for about 35% of global electric car sales, indicating a growing competition that is often overshadowed by Tesla's brand visibility. This is significant because it points to a potential shift in consumer preferences and market dynamics, where Tesla's established position is challenged by more competitively priced and diverse offerings from Chinese manufacturers. Understanding this shift is crucial for anticipating future market trends and Tesla's strategic responses. 2. Price wars and profit margins. The report mentions a price war initiated by Tesla and BYD, with both companies cutting prices by up to 20%. This aspect is significant because it signifies a broader trend across the industry where profit margins are shrinking due to aggressive pricing strategies. Many emerging players are struggling to meet sales targets, and this price competition could lead to consolidation within the industry. The implications of these price wars extend beyond immediate sales figures. They affect long-term sustainability and profitability for all manufacturers involved, including Tesla, which must balance competitive pricing with maintaining healthy margins. 3. Technological innovation and full self-driving FSD. Tesla's focus on advancing its FSD capabilities is pivotal for its future growth. The projections for revenue growth reaching $127.61 billion by 2025 are heavily reliant on the successful deployment of this technology. The significance of FSD lies not only in enhancing vehicle functionality but also in creating new revenue streams through potential ride-hailing services. This aspect is important because it underscores Tesla's strategy of integrating technology deeply into its business model, which may differentiate it from competitors who are primarily focused on vehicle sales. 4. Market expansion strategies. Tesla's plans to enter new markets, particularly in India and Southeast Asia, are critical for its growth strategy. The significance of this expansion lies in the potential to tap into rapidly growing markets where EV adoption is still in its early stages. However, entering these markets comes with challenges, including local competition and the need to adapt to different consumer preferences. This contextual understanding is essential for evaluating Tesla's long-term viability and market strategy in the face of rising competition from both established and emerging players. 5. Investor sentiment and stock volatility. The report illustrates the volatility of Tesla's stock and the mixed sentiments among analysts regarding its future performance. While some analysts predict significant growth due to Tesla's innovative edge, others caution about the risks posed by competition and market fluctuations. The importance of this point lies in its reflection of broader market dynamics and investor confidence, which can significantly influence Tesla's operational decisions and strategic initiatives. Investors must consider these factors when evaluating the potential for Tesla's stock in a rapidly changing environment. 6. Emerging competition and consolidation trends. The report notes that many smaller EV manufacturers are struggling to meet sales targets, which could lead to a consolidation phase within the industry. This trend is significant as it may reshape the competitive landscape, favoring larger, more established players like Tesla and BYD. Understanding this consolidation is crucial for investors and industry stakeholders, as it may dictate future market dynamics and the survival of various brands. 7. Technological advancements in battery technology. The report discusses the importance of battery technology developments, particularly in the context of supply chains and production costs. Tesla's commitment to advancing battery technology is critical for maintaining its competitive edge. This focus is significant because it highlights the ongoing need for innovation in the EV sector, especially as battery costs can heavily influence overall vehicle pricing and profitability. 8. Regulatory challenges and external factors. The mention of regulatory changes and their potential impact on Tesla's operations and market strategies is crucial. Regulatory environments can significantly influence the feasibility of expansion plans and the competitiveness of EV manufacturers. Understanding these challenges is vital for anticipating how external factors may shape Tesla's business strategies and market positioning. Conclusion. The content outlined above is pivotal for understanding the nuances of Tesla's position in the global EV market against the backdrop of rising competition, particularly from Chinese manufacturers, and the ongoing technological advancements that drive the industry. Each aspect discussed not only contributes to a comprehensive picture of the current market dynamics but also sets the stage for anticipating future developments, challenges, and opportunities that could shape Tesla's trajectory in the coming years. Stakeholders, including investors, policymakers, and industry competitors, must pay close attention to these trends to navigate the evolving landscape effectively. Key points for in-depth analysis and discussion on competitive landscape. Global EV market dynamics. 1. Market performance and competitive dynamics. Tesla and BYD together held a significant 35% share of global electric vehicle EV sales by the end of 2023, surpassing other major car makers. The rise of BYD, particularly in plug-in hybrid vehicles, and its growing presence in battery electric vehicles (BEVs) illustrates the shifting competitive landscape. This competition is pushing traditional automotive giants to adapt, as they grapple with declining market shares and increasing pressure to innovate. The discussion can delve into how the competitive dynamics between Tesla, BYD, and other emerging players like NIO are reshaping strategies for production, pricing, and technological advancements in the EV sector. Analyzing the factors behind BYD's rapid ascent and Tesla's fluctuating market share will provide insights into the broader industry trends. 2. Price wars and profit margin squeeze. The EV market has entered a phase of aggressive pricing strategies, with Tesla and BYD implementing price cuts of up to 20% in 2023. This has led to a significant squeeze on profit margins across the industry, impacting both established players and new entrants. Analyzing the implications of these price wars on profitability, consumer behavior, and market positioning will be critical. The focus could be on how companies are balancing the need for competitive pricing with the necessity of maintaining sustainable profit margins. Discussion could also include strategies that manufacturers are adopting to survive in this environment, including cost-cutting measures, product differentiation, and exploring new revenue streams. 3. Technological innovation as a competitive advantage. Tesla's emphasis on technological advancements, especially in full self-driving FSD capabilities and energy solutions, is projected to drive significant revenue growth, with estimates reaching $127.61 billion by 2025. This focus on innovation is seen as crucial for Tesla's future growth and market leadership. A discussion could explore how technological innovation is shaping the competitive landscape, including the importance of advancements in battery technology, AI integration, and the development of new vehicle models. The role of R&D investment in maintaining a competitive edge against rivals, especially in the context of regulatory challenges and consumer expectations, would be an essential aspect of this analysis. 4. Market expansion strategies and global presence. Tesla's plans for market expansion into regions like India and Southeast Asia highlight its strategic approach to maintaining growth amid rising competition from Chinese manufacturers. This expansion is positioned as essential not only for capturing new markets but also for bolstering Tesla's production capabilities and economies of scale. Analyzing the challenges and opportunities associated with entering new markets, including navigating regulatory environments, understanding local consumer preferences, and competing against established local players, will provide a comprehensive view of Tesla's strategic positioning. Furthermore, discussions could include how Tesla's expansion strategies may influence global EV market dynamics and competitive interplay among manufacturers. Conclusion. The competitive dynamics of the global EV market are complex and multifaceted, influenced by rapid technological advancements, aggressive pricing strategies, and evolving market landscapes. By focusing on these 4 key points, discussions can yield valuable insights into how Tesla and its rivals navigate challenges and opportunities in the pursuit of market leadership in the electrified transportation sector. 1. The rise of Ford and General Motors in the 20th century. In the early 1900s, Ford and General Motors (GM) became dominant forces in the American automobile market by leveraging mass production techniques and innovative marketing strategies. Ford's introduction of the assembly line revolutionized vehicle manufacturing, making cars affordable for the average consumer. GM responded with a diverse product line and aggressive branding strategies. This competitive landscape set the stage for a decades-long rivalry that shaped the auto industry. 2. The competition between Coca-Cola and Pepsi. The Cola Wars of the late 20th century exemplified fierce competition in the beverage industry. Coca-Cola, established in 1886, maintained a strong market presence through extensive marketing and distribution strategies. Pepsi, initially a smaller player, adopted aggressive advertising campaigns and introduced innovative products like Diet Pepsi to capture market share. This rivalry led to significant shifts in consumer preferences and marketing strategies, influencing the broader beverage industry. 3. Apple versus Microsoft in the technology sector. The late 20th and early 21st centuries saw intense competition between Apple and Microsoft, two titans in the technology sector. Microsoft, with its Windows operating system, dominated the personal computer market, while Apple differentiated itself with its innovative designs and user-friendly interfaces. The competition fueled rapid advancements in technology and marketing strategies, culminating in a battle for market share and brand loyalty that continues to this day. Future outlook: global EV market dynamics and Tesla's position 2023 to 2025. As the global electric vehicle EV market continues to evolve, Tesla's role remains pivotal, yet increasingly challenged by rising competitors, particularly from China. By 2025, we expect several dynamics to shape Tesla's position and the broader market landscape. Market projections and competitive dynamics. 1. Market share and revenue growth. By 2025, Tesla is projected to significantly increase its revenue, potentially reaching $127.61 billion, driven by higher vehicle deliveries and expanded energy solutions. This forecast represents a substantial growth trajectory despite intensified competition, particularly from BYD and other Chinese manufacturers that are rapidly gaining market share. 2. Competitive landscape. The competition from Chinese EV makers such as BYD, NIO, and XPeng is intensifying. These companies are not only innovating but also leveraging lower production costs to offer competitively priced vehicles, challenging Tesla's market dominance. By the end of 2023, Tesla and BYD together accounted for approximately 35% of global EV sales, indicating a clear rivalry that will likely continue into 2025. 3. Price wars. The global EV market is experiencing price wars, with significant price reductions from both Tesla and BYD, sometimes up to 20%. This trend is expected to continue as companies fight for market share, impacting profit margins across the industry. In response to these pressures, Tesla's ability to maintain robust profit margins through its premium offerings and cost efficiencies will be crucial. Technological innovations. 1. Advancements in autonomy. Tesla's ongoing investment in full self-driving FSD technology will be central to its growth strategy. By 2025, advancements in FSD could lead to new revenue streams, transforming how vehicles are utilized. Analysts anticipate that the full integration of autonomous features could generate substantial market interest and drive sales. 2. Battery technology. Innovations in battery technology are vital. Tesla's efforts to enhance battery efficiency and reduce costs will be critical in maintaining its competitive edge against rivals. As the company continues to optimize its battery supply chain, including partnerships with key suppliers, It can better manage production costs and amplify its output. 3. Energy solutions expansion. Tesla's diversification into energy products including solar energy and battery storage is expected to gain traction. The increasing global emphasis on renewable energy will bolster demand for these solutions, providing Tesla with additional growth avenues. Strategic initiatives for market expansion. 1. Geographic expansion. To counter competition, Tesla is actively pursuing market expansion strategies, particularly in regions like India and Southeast Asia. These emerging markets offer significant growth potential, with consumers increasingly leaning towards electric mobility. Tesla's entry into these markets could unlock substantial new revenue streams and enhance its global footprint. 2. Production ramp-up. Tesla aims to boost production capacity at its gigafactories, targeting millions of vehicles annually by 2025. This strategy is essential for meeting anticipated demand and ensuring timely deliveries, which are key to customer satisfaction and brand loyalty. 3. New model introductions. The launch of new vehicle models, including an anticipated affordable $25,000 model and the Cybertruck, will help Tesla appeal to a broader audience. This diversification in product offerings can capture different segments of the market, from budget-conscious consumers to premium buyers. Financial performance and stock outlook. 1. Stock volatility. Tesla's stock has historically exhibited volatility, and this trend is expected to continue as market dynamics shift. While some analysts predict a bullish outlook for Tesla's stock potentially reaching values between $218 and $786 by the end of 2025, others caution about the risks posed by competition and market fluctuations. 2. Earnings per share. Analysts project earnings per share (EPS) to rise significantly, reflecting operational efficiencies and strategic growth initiatives. By 2025, EPS could reach approximately $3.87, marking a notable increase from previous years. 3. Investor sentiment. Investor confidence in Tesla is mixed, influenced by its innovative capabilities and market challenges. The company's ability to navigate regulatory changes and supply chain issues will play a crucial role in shaping investor sentiment and stock performance. Challenges ahead. 1. Regulatory landscape. Tesla operates in a highly regulated environment, and changes in policy can have significant impacts on its operations. The company must navigate various regulations, particularly in key markets like the US and China, where EV policies are evolving rapidly. 2. Supply chain disruptions. The global supply chain remains susceptible to disruptions, which can affect production timelines and costs. Tesla's proactive measures to secure supply chains for critical components such as batteries and semiconductor chips will be essential in mitigating these risks. 3. Market competition. The proliferation of EV manufacturers, particularly those from China, poses a persistent threat to Tesla's market share, as competitors continue to innovate and penetrate new markets. Tesla will need to sustain its momentum through strategic initiatives and technological advancements. Conclusion. Looking toward 2025, Tesla is poised for significant growth amid a challenging landscape marked by fierce competition and evolving market dynamics. Its success will hinge on its ability to leverage technological innovations, expand its geographic reach, and effectively manage production and supply chain challenges. While the potential for revenue growth and market leadership remains strong, Tesla must remain agile and responsive to the competitive pressures that define the global EV market.